Let's continue from where we left in the previous video. Trader, if you have not watched the part 1 of the video, make sure to watch the video. It is available in the description of this current video so that you can better understand the current video which is in front of you. And now, in the last video, part 1 of this Fibonacci extension, we have left with this example on how to mark. Now, what is the importance of this 1.618 and 0? How I personally try to make sure to use it. Let's understand. First of all, there are 3 stages. Stage 1 is understanding around 1 or around 0 or around 0.68 what bulls and bears are doing. Who is stronger, trying to be more stronger, who is trying to be more weaker. To first understand, let's take the input of it, because there is small variations will be there compared to the type 1 of marking Fibonacci extension, type 2 of marking Fibonacci extension. How to mark it already discussed in the part 1 of the video. So now this is type 2 of marking Fibonacci extension. So type 2 is a category or a kind Jampe we are using it to mark, because the open is below the previous day's midpoint. So we are marking towards extension towards downside. Try to understand it. We are marking extension towards downside as it is a type 2. Extension towards downside will have 0 on the higher side and 1 on the lower side. So you will not get confused also. Now, what is happening? What is the use of this level 1.68 and 0? As it is type 2, as per type 2, as the extension is on the downside, because type 2 formation has happened in terms of opening below previous day's midpoint. Very important to understand. I'm just looking at price action around the levels here of the Fibonacci levels. Yampe 1 is the nearest level. What we can understand from the type 2 scenario, and when the price is near these levels, what I am more giving importance here is, as per type 2, if price below 0.618, bearish players are trying to dominate. If price below one level, more fresh bears are strongly being invited to come and dominate in terms of fresh auction. But Yampi here, what is happening? Price trying to come to the one levels. Sellers not able to do. Yampi first candle open here, straight away down move. Instantly price is rejecting. This instant rejection with a wick formation telling us that direct end price was clearly one level is here. Price almost went even below this. You just see the spike here. This was very huge spike. This will also have free candle. It's not like price came to this low from the opening. It has came to this low. This will have spike. But one thing is very clear, that is opening spike, or you can say opening trap, generally happens in the first candle when the markets are slight volatile. Yampe instantly price is coming back, rejecting and closing inside, closing above the one level as per type 2. That means the information is sellers, even despite price going below one level, they are not showing. Fresh sellers, fresh bearish players are not showing any major interest to come and dominate after a gap down, after price going below it. That means the int is very clear. As I mentioned, Fibonacci extension is used as one of the additional confirmation. Not only blindly this confirmation, additional confirmation. Int is very clear. Bearish players are not ready to dominate. That means plan rule for me remains simple. Until price is not trading below one level, there is no major intention for bearishness. Next focus is here, 0.618. As per type 2, price trading below 0.618, as the extension is on the downside because of type 2. Price trading below 0.618. Still bearish players can take a resistance and move down, but Yampe the thing is completely opposite. Price not ready to take a resistance, is trying to take a support. Yampe we don't have any good bullish candle, bullish rejection, but if we're just trying to see this area, from here where information is clear, sellers are not showing aggressive intention. Here 0.68, type 2 downside extension, it should have easily taken resistance if the sellers were stronger, not done. Opposite price trying to take support. But no good bullish candle, but information is direction is quite obvious and clear. Here, clear bullish rejection and the move was quick. Yampe multiple support, move was small, or I can say taken some time and then a move. Yampe quick, neat and clean. Important factor here is with the Fibonacci extension, you're getting an additional confirmation for direction for bulls who are trying to dominate or bears who are trying to dominate what is happening around the market. You're getting multiple information because just don't stay in the market like entry. Try to understand once you are not aware of the price behavior, price movement, direction, what is happening in the market, bulls or bears, who is stronger, who is weaker. Until you don't have awareness of all this information, you are already not focusing on getting live information from the market. You are just like doing the same as a normal retail trader who just forcing market entry and ultimately facing losses. Come out of the wrong habit of a loss making trader so that we are more aware and you are more aware and trader can move towards the path of profitability. Once you have understanding, how you will gain confidence, once you know direction, once you know bulls or bears, who is trying to take control or who is weaker, what is the area of price action going on, what is the price behavior, whether price is taking support or resistance. Once you know all this information, then only confidence will try to come in your trading and you can start executing with less emotions, less fear and more clarity. Let's take one more example because a typical day Jampe price action is sideways. After the sideways market, next trading session, how and what is the price reaction going on? We'll take an example in the upcoming video, part 3 of the video, about the how to identify this kind of sideways market using Fibonacci extension as an additional confirmation for your trading. Let's take the example. What happens next day of the sideways market? Where is the price? Price is opening here. Low, high, midpoint is somewhere here. So price is opening below the midpoint. That means extension towards downside. Type 2 marking. Type 2 marking tells first I'll be selecting point 1 as high of previous day's high. Point 2 previous day's low. Point 3 is from the closing nearest rejection from the sellers, which is here. This one. Market closed here. This is where price nearest rejection. We have one more rejection here, but nearest rejection from the close is this. So this becomes point number 3. So now what is happening? As per type 2, price made a small upside spike above 0 level, reversed back. As per type 2, if price starts trading more above 0 levels, means more clear invitation of fresh bulls can try to come and dominate. But have they done it? No. But on the opposite, price is rejecting in the first candle itself. What is the information? Bulls are not showing any aggressive intention to dominate around 0 level. Fresh bulls are not ready. Next, 0.618. If price starts going below it, more bearish players can try to take control. But no. Price, multiple attempts from the sellers, price trying to take a support, quick upside price action development. And price stopping exactly in this yesterday's sideways area. That is what very important. I have taken this example is because when price is sideways, price action is sideways in the previous trading session, and price again approaching to the same level. Most traders have an habit of predicting, sir, it will cross, it will take resistance, it will take support, it will cross on the downside. Prediction is one of the worst habit of a trader. Blindly predicting it will happen, this will happen, that will happen. Those kind of random habits are stopping you from becoming more matured and an successful trader. When there is sideways market, especially previous trading session or any trading session, your previous trading session, how many hours of sideways? From almost from morning 9:30 to 3:30, almost 6 hours of sideways market. This is not time pass. 6 hours of sideways market. Bulls or bears would have taken just 5-10 minutes to push price up or down. Have they done it? No. 6 hours of sideways means 6 hours of fight between bulls and bears. No one dominated. But on the next day, just see this next trading session. This is the sideways area, right? Just a minute. This is the sideways area, price action development, right? Next day, price going to the extreme. That is the reason I always say, even in the last week, in the Telegram channel, I have mentioned about when price is in the sideways, I focus to execute on the extreme. Free Telegram channel I'm talking about. I try to focus what is the price action on the extreme and I react for my opportunity. Price came to the extreme. What happened? Rejected and reversed. Also, zero level was there. Sideways area mein extreme mein rejecting means bulls are not ready to show major intention. Not ready trading above zero levels as per type 2. Bulls are not ready. Multiple year bulls are weaker. And this is the lower extreme. Jampe, what is happening in the price? Price taking, bulls are taking support from 0.68. But this is the same area yesterday. Both bulls and bears were fighting. Sellers not dominated on the downside, bulls not dominated on the upside. But next trading session, exactly acting as resistance. Price sideways, bearish candle rejections. One more pullback, per se rejection, and then straight back down move in the price. So have you ever tried to check these data points? No, most traders don't do it. Just want green, green, green candle, I will jump and buy. Red, red, red candle, I will jump and take bearish position. Problem. Focus on the price. Focus on the price behavior. Understand the price action. Location of price. Where is the price? What is the level, support, resistance, important zones, areas? Understand all this. Then focus on entry, entry, entry. That is more important. As if you, this is might be very straightforward statement, but that is the reality. If you are ready to accept the reality, fine and fair. Not ready to accept, it is as per your comfort, your trading, your capital. Okay. We'll join back again in the next part 3 of the video. You can check the link in the description also. Thank you.